All right, everyone, here we are with ticker symbol AMZN, Amazon Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Amazon currently is back into bearish territory. It broke through the 50-day moving average. It's slightly below it, and it has leveled off at 3166.63. Now let's go ahead and move our supports to their new location, and we're going to have to monitor this one closely tomorrow because now it is in bearish territory. It was not able to break through this resistance, and it went into a bearish trajectory right before earnings. I mean, earnings is coming up tomorrow. That's very interesting to me, and we're going to have to see what's going on with Amazon for tomorrow and the days to come, and also once they release it. So Amazon Inc. is below the 50-day moving average, and I'm just going to round it up and down because of the fact that the cents are kind of hard to land exactly on. The exact number is 32.18, but just to round it down, 32.1840 is the 50-day moving average. If we are below it, we're in bearish territory, and if we're above it, we will be in bullish territory. So right now we're in bearish territory, and for the bulls to bring this back up, they need to break through the 50-day moving average and get back into bullish territory. But before getting there, they have to break through this resistance level, which is 31.97, turn that into a support, break away from it, get closer to the 50-day moving average, and cross it to get back into bullish territory. Super important for the bulls to do so, to break through 31.97, turn it into a support to reach newer highs and new resistance levels. On the other hand, we have what the bears want, and the bears want to break through support. If they break through the support, this could be on its way to newer lows, pulling further away from the 50-day moving average in a downward direction, and that's 31.6391. If that gets broken through, I want to emphasize to all investors, pay very close attention to how this stock is reacting and behaving before making any moves. Check out your 1 minute, your 5 minute, your 15-minute chart. Look at the inflow, the outflow. If you have level 2s, look at the volume of orders. And if you don't, just look at the different volumes of inflow and outflow, how many people are buying, how many people are selling at a time, to see who is dominating the charts. If this breaks through support 31.6391, I want to emphasize, pay very close attention to the behavior. Like, really, like, you gotta zoom on in, because this was a big jump in just one day. This was literally from 32.91 highest peak all the way down to 31.66. That's a whole difference of $130 in one day. That's why you gotta pay close attention to these. You need to know the 50-day moving average before you're gonna end up in bearish territory and bullish territory, and if there could be a rebound, or if this is going to continue down as it did. These are very important indicators, and obviously don't just rely solely on them, but they do help a lot. Again, I want to emphasize, for the bulls to have a recovery, they need to break through the 50-day moving average, and before getting there, they need to break through this resistance of 31.97. And back to the bears are going to try to break through this. Pay close attention to the behavior, and if the bulls are even having a chance to reappear and slightly bring this back up. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart, and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up Like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.